What's up traders, Douglas here, and today we're going to go over an ideal day trading strategy that you can use on ThinkorSwim or whatever your ideal platform is to day trade stocks. All right, normally I'm talking about futures. Today we're talking about stocks. We're going to get right to it. I took this trade yesterday in MRVL, Marvel Technologies. Not the superheroes, but for one day, this stock was my superhero. Okay, so let's look at the chart. And over here to the far right, you'll see where I took the trade. I took it at about 840. And if you're looking at the chart, at the candlesticks, one thing you're going to notice is there is nothing here to show you a traditional day trade setup. No candlestick pattern really, no candlestick resistance, no nothing. But that's fine. That's fine because candlesticks on a chart have nothing to do where price is going. Nothing at all. Trades do. Traders, where they want to trade and how much they trade, buy and sell pressure. That's what moves stocks. So how do you see that? You use a program called Bookmap. So I'm going to show you exactly what I was looking at in Bookmap. So this is Bookmap. And what I want you to see is the candlestick here, all right, versus what we're looking at in Bookmap. This is the exact same time frame. This is what I was viewing when I got into the stock. This is a heat map of the buyers and sellers in the dome. These are the people that actually want to execute trades. Candlesticks don't want to execute trades, okay? People do. And what you'll notice is this highlighted area right here. Okay, so the more the highlighted area, the more traders are waiting, and the longer that highlighted area has been there, the longer they've been waiting to trade. So there's two major things that I was looking at. One, this big group of buyers comes in kind of out of the blue. Okay, stock was moving up just a little bit, not a lot, and then a big group of buyers comes in. And that combined with a big group of sellers resting up here. Now, what some people might find strange is the big group of sellers, the first thought would be, well, they just want to sell and drive price down right there. That's why there's this big dog sitting up there, because at 25,000 shares, that's not a retail trader. It's probably not a lot of retail traders. It's probably mostly a bank, a big player, those kind of things. And what might shock people is he might not care about price going down at that price, but what he really wants is to get filled at that price. And so what these players will do, what the big banks will do, is drive price into them. Okay, that's why you think you get stopped out, because you do get stopped out. They need you to get stopped out to fulfill their bigger orders. And they have to drive price up to them to get filled or down to them to get filled, depending on where they're at, okay? And so they'll manipulate the price. They might come in, even though they want to sell a huge lot up there at $28. Price is currently at $27.36. They may start buying down here to drive price up to them because they can buy a lot less shares to drive price up into their much larger sell orders. Okay, so that's the game. And that's exactly the way this played out. So I think you'll find this interesting, and hopefully you understand what you're looking at. These bubbles here, these red and blue bubbles, are the actual executed orders of buyers and sellers. So the next thing that happens, we're going to look at a little more zoomed in view of this area. So let's get to chart number 2. So this is the more zoomed in view of what I was already talking about. So this is still pretty much the exact same time frame as you're looking over here on the candle. Now all you see on a candle is that a candle is moved up, but in here you can see that a candle's moved up and buyers are here to support. You don't know if those buyers are going to hold. Maybe those buyers want to get filled here, and then price will go down and start filling buyers down here. You don't know, but at least you have an edge now. And so my edge was, I had the theory that it was going to price was going to drive up into that $28 level where the big seller was. When the buyers come into support, I buy and then hide my stop on the other side. So I'm hiding my stop around 27, 26, something like that. I'm risking basically 20 cents. And at $28, I'm shooting for 2 to 3 times my money. So even if you're only right 50% of the time, you're doing very well in your profit and loss statement. Okay? And you know very quickly if you're wrong, because these buyers will leave before price comes back down to them, or they'll get executed and price will drive right through them. But at that point in time, you know you're wrong, and so you just get out and look for another setup. So that's how you go for a proper risk reward and make the big dollars, okay? And so 2 days before, I took a similar trade. I didn't have the support level there. I was just shooting for price to be driven up into a certain price level, and I got beat, all right? So I got out, I lost 20 cents, but it wasn't a big deal because the next day I come back and I make 2 to 3 times that. All right, so I don't want you to think that this is like some kind of golden perfect setup that never fails. So hopefully you get the point there. We'll drop that chart down. Let's go to the aftermath. All right, so this is what ends up happening. This is when I got out. So price drives up all day long. And then I get out around 11 o'clock at 27.83. I got in at 27.38. Made $45 on 100 shares. All right, now remember the day before or 2 days before, I lost about $22. Okay, so this more than made up for that. It takes a lot of that fear out of trading, a lot of the risk out of trading, which is a big, big thing. But of course, we need to look at this in Bookmap. So if you come down and follow all the way down to this little guy down here, this little tiny highlighted area, that's what I was showing you earlier. That was those 8,000 buyers that had moved in. They weren't there that long, but they were there long enough to drive price up. Price kept going up. It comes back. It bounces around the VWAP a couple times. There was a few sellers that come in right here. They get filled up. Maybe they wanted to get filled up. And then price drives right up to the $28 level that I had planned out previously. So when people are wondering, okay, so now you told me an entry of where to get in, but where do I get out? You know, it's great knowing how to get in, but if you don't know where to get out, it's almost worthless knowing where to get in. Well, with Bookmap, not only can you pick better areas to enter and tighter stops, but you can pick better targets. Okay, so I picked this at the very beginning of the day. I picked it at 8:40, and at 11 o'clock, it's right up there at my target. Okay, like I said, not all the time, but now you have a plan that you can work with. And I was backed up by the market today. So especially right now when stocks have been so crazy, the overall market really affects what direction they're moving. And if you're going to buy, you want the whole market hopefully moving in your direction right now. Now, when volatility goes down later, you know, that might not be as important. Still important, but not as important. But right now, it's really important. So this is a tick chart, T-I-C-K. Okay, this is a 5-minute tick chart set to Heiken Ashi. And over here is Wednesday. This is when I took the trade. And what you'll see, this is the zero line, okay? So a tick chart, what it does is it measures the overall stock market, a whole huge bundle of stocks ticking up or ticking down. So is their price ticking up or is their price ticking down? So this gives you an overview of the entire market. Now, the general idea behind this is if you're above the zero line, it's kind of bullish. If you're below the zero line, it's most likely bearish. And at about 8:40, the tick chart was still way up here. The zero line is this black line. So we're nowhere near that. And then for the entire day, I mean, we come down to it, but for the entire day, there is really no bearish activity in the entire stock market, okay? So knowing that makes it a lot easier to hold on to that trade, because I had to hold on to it for a few hours to get to the target that I wanted. Of course, you can have big losing stocks on a bull run of the stock market. Vice versa, you can have a winning stock on a bearish run of the stock market, but odds are that you want to play with the overall market. So you combine Bookmap, combine the tick chart, combine risk reward, and you've set yourself up for a pretty good trading strategy. The last question is how did I pick out Marvel of the thousands, millions of stocks that you could pick out? Well, there's different ways to do that. I'm going to show you one of those. Stockbeep.com. It is free. It'll show you, it's just for the day, okay? It's just for the day, but it'll show you market movers, gaps up, gaps down, and I'm looking at unusual volume. Now right here, RVol, this is relative volume. So this is showing you the stocks that are trading at a much higher volume than they normally would. So in this scenario, Thermogenesis, THMO, is trading at 12.5 times its normal volume. Something's going on in that stock. News, whatever it is, traders have taken a much bigger interest in that stock than they normally do. On Wednesday, Marvel was in this list. I looked at probably 5 different stocks, like that setup the best, and then that's the one I took. So that's how you find a stock, that's how you find the setup, and then that's how you find your exit. So if you have any questions, leave them in the comments below. And of course, don't forget to hit that like button. All right, guys, peace out.